some checking to make sure everyone was okay with that. There were fairly simple bills that that doesn't mean to be the death curse of them, but they were fairly straightforward bills. One of those was one that we passed out of the House last year and just lost it in the COVID environment. So we will hopefully get those kicked out and work tomorrow. Any questions on the agenda for tomorrow or the week? Seeing none, we will go ahead and move into our informational briefing for today. We would like to welcome to committee Secretary of the Department of Revenue, Mark Burghardt. He is going to provide us with an overview of the department and answer all of your burning questions about Kansas Department of Revenue. Mark, can you hear us?
I can, Mr. Chairman. Can you hear me?
Yes, loud and clear, sir. Thank you for joining us.
Thank you for the opportunity to address the committee. I did just want to give a very brief overview of the department and perhaps more importantly, summarize the activities of the department last year and what you might expect from the department this particular calendar year. You should have provided to you a memo, and it looks lengthy, but I'm not going to spend a lot of time on portions of it. There is a lot of information regarding tax collections for the state of Kansas, and I'm hopeful that when you are considering bills before your committee, having this background information will allow you to put those bills into a little more perspective in terms of what they actually mean to state financing. So I believe on the first part of the memo, you've got a organization chart for the department. And again, don't want to spend a whole lot of time on that other than to let you know, as most of you do know, that the department has 4 primary divisions. Of course, our division of taxation, where I intend to spend most of my time today. We have a division of vehicles, a division of alcoholic beverage control, and a division of property valuation. And I believe your committee may have had a briefing from PVD already this year. But again, did want to focus primarily on the division of taxation. In that organization chart, there's one item that I don't have on there. And this is the Office of the Taxpayer Advocate, whose name is Bob Cleland, who does a tremendous job addressing specific taxpayer concerns. And I bring that to your attention because as legislators, I know you frequently get contacted about tax issues, and to the extent that you do get contacted and you want some immediate attention, I would recommend Mr. Cleland to you, and we will follow up with the committee and provide his information to you. But Bob's a very, very valuable resource to the department. He's a longtime employee, and there isn't much about taxes and tax administration within the department that Bob does not know about. The department itself, we've got over 1,000 employees at this point in time. In Topeka, we're in 5 buildings. We're in 40 other locations, state buildings that we've leased across the state, and actually in 70 county offices as well, county courthouses. Most of those locations are dealing with our motor vehicle function and driver's licensing functions. If you turn to page 1 of this memo, again, just kind of wanted to give you the big picture of what the department does and what it collects. But for last fiscal year, you can see that the department collected $10.1 billion in taxes and fees. And as you can scroll down the list of tax types, you can see how important individual income tax is. Last year's receipts, 38% was individual income tax. After that, you'll see the corporate income tax figures, which attributed or accounts for 4.3% of last year's receipts, and then sales and use tax at 45%. So that's what the department collected in fiscal year 2020. And keep in mind, that is a gross collection. We're going to talk about some net figures here in just a couple of minutes. On page 2, you can see how those funds are distributed. Nearly 68% just goes to the general fund, and then the highway fund is also another large recipient of those funds, primarily motor fuel tax. If you turn to page 3, this is where we look at dollar amounts net of refunds, and you have to keep in mind that, you know, we may collect a lot of individual income tax, but we also pay a lot of refunds. Last year we paid nearly 900,000 refunds in the neighborhood of 450 million, 425, 450 million. So this particular chart and schedule reflects the net net receipts. I also want to caution you that when you look at the individual income tax, and again, this is on page 3, individual income tax, the corporate income tax, and the privilege tax, that's a tax on banks and savings and loans. You'll notice you'll see a drop in revenues. Please keep in mind and remember that last year, the state of Kansas granted an extension when the filing season was in full swing, and instead of having returns due April 15th, those were pushed off until July 15th. So a significant sum of money was transferred from fiscal year 20 to fiscal year 21. And we're talking in excess of $500 million in deferred revenue. So when you see those minus figures, keep in mind that through those extensions, we moved tax from one fiscal year to the next. On page 4 and 5, again, as we go through bills during the session and kind of want to get a general sense of what all of this means to the taxpayers living in your districts, this particular chart is very interesting, and it gives you on a county by county basis what the gross tax collections were for those counties, and then on a per capita basis. And the taxes that are mentioned here are, of course, the individual income tax, the sales tax, vehicle property tax, and then just the real and personal property tax. So again, interesting information when you're considering measures before the committee, what those particular measures might mean in terms of impact for your constituents. If you look on page 6, again, not going to spend a lot of time on this, but this sort of breaks out the various units within the Division of Taxation. And I would note that our Director of Taxation is Steve Stotts, who's a very experienced administrator at the department and is in charge of the Division of Taxation, and he oversees all of these particular units within the department. One of the areas and one of the units that's most that I view and monitor very closely is the financial and document management section. Over on the second floor of the docking building, there are a group of people that basically process all of the paper that comes into the department and all of the checks that come into the department. It is an absolutely critical part of the department's operations. During last year, during the pandemic, that particular function continued uninterrupted through the course of the pandemic. I have a lot of respect for the individuals who work in that particular area. They are very dedicated, and as you can imagine, when peak filing seasons hit and we have hundreds of millions of dollars flowing through the state system, it needs to be dealt with immediately when it comes into the department. And I'm going to talk about that unit a little bit later, because we have some enhancements that are happening in that particular section of the department. So beyond that, I'm not going to go into much more detail on the other units within the department. If you look over to page 7, this kind of breaks down on a tax-by-tax basis the receipts that the department receives. And again, these are after refunds. Again, on page 7, you have the individual income tax. And again, for 2020, you can see where the receipts were $3.3 billion. Again, that amount is sort of artificially low because of the extensions that we granted that pushed significant collections into fiscal year 21. On that same page, it gives you an idea of the number of returns that the department processes. The particular chart that you see there for fiscal year 2019, you'll see 1.6 million individual income tax returns filed. 1.4 million of those were electronically filed returns. The difference are the paper returns, and that's where the channel management enters the picture and is so important. I can tell you that for last calendar year, 2020, the actual number of returns, individual returns that were received and processed was 1.7 million. Again, processed during the course of the pandemic without a single down day of production, which I think is a tremendous achievement for those individuals involved in that process. On page 8, gives you more individual income tax information. Again, as the committee is considering bills dealing with standard deductions, itemized deductions, wage or tax rates, you'll get a sense of how the number of returns break out based upon adjusted gross income brackets. So again, information that you might find valuable during the course of the session when you really want to know, what does this mean? What type of taxpayer might be impacted by a particular bill? The same on page 9, it gives you even more detail regarding the types of returns that are filed, whether they're joint returns or single returns, and the number of those returns that are filed and processed by the department. On page 10, we shift to corporate income tax. Corporate income tax is very interesting because so much of the tax is paid by so few taxpayers. And if you look for fiscal year 2020, for example, again, 384 million. This is a after refund figure. And again, keep in mind that extensions pushed corporate income tax receipts into fiscal year 21, so there was a drop there. But if you'll look at the schedule at the bottom, you'll see that almost 95% of the corporate income tax is paid by 3.8% of the companies. So 1,139 companies paid roughly 95% of the tax in the state of Kansas. Of the almost 30,000 returns that are filed, 60% of those don't have any tax liability. There's no taxable income. And I also want to make sure you understand that corporate income tax is imposed only on C corporations. It is not imposed on any sort of flow-through entity like an S corporation, partners in a partnership, or a limited liability company. That income and expenses flow through to the individual taxpayers, and they report that on their individual return. So on page 10, the corporate income tax, strictly C corporations, and again, you have a good sense of how that tax burden is spread among the companies, with, again, very few companies paying it. If you turn to page 11, you'll see some of the same information regarding the privilege tax. And again, the privilege tax is a tax on banks and savings and loans. There's only 397 taxpayers in the banking component, and even fewer savings and loans. Again, most of the liability is limited to a few of the entities. Flipping over to page 12, you'll see the sales and use tax receipts. And if you look on page 12 toward the middle of the page at the bottom, you'll see the state use tax figures, and you'll see an increase from fiscal year 2019 to 2020 of a pretty meaningful amount. And we're going to talk about that here in just a second on the next page. But that's largely attributed to increased registrations of out-of-state merchants, and also essentially changes in customer purchasing patterns and their habits. With the pandemic, it's just really emphasized the expansion of e-commerce and folks being able to sit at home and make their purchases using their laptops. If you turn over to page 13, this gives you a bit of history on the compensating use tax. And as you all know, with the Wayfair decision that came down in 2018, the Supreme Court eliminated the physical presence requirement in order for a state to require an out-of-state remote seller to collect and remit tax on sales made into the state of Kansas. So instead of having that physical presence requirement, now there's an economic presence or an economic nexus, business presence in the state. So you can see what has happened to receipts, and it's just not the receipts at the state level. This also affects local units of government. For example, from fiscal year 2019 to 2020, there was a $65 million increase in use tax at the state level. At the local level, it was 20 million. The department, as you know, on August 1, 2019, prepared a notice to advise and inform out-of-state remote sellers of the Kansas law and of the need to get registered with the department. Since that notice was issued, Kansas has increased out-of-state registrations by roughly 6,000 new registrants. And over that period of time, or since that registration notice back in late 2019, we've had a very meaningful increase in receipts on sales made into the state of Kansas. Last January, the state set a record of 52.6 million. That's a monthly record for consumers compensating use tax receipts. I just looked at the numbers. We just finished the review of the receipts for January of this year, and that record has now fallen. The receipts reflect for January a 64.6 million new record receipts for compensating use tax. And again, that's essentially attributable to the fact that we have more companies registered and remitting and more individuals using the internet to make their purchases. On page 14, you'll see some information at the top. We have a line on our individual income tax returns, and you've probably all seen it on line 20, where individuals are to report their use tax on purchases where they made the purchase from out of state and it's delivered in the state and no tax has been collected. Technically, there's an obligation to pay tax on that. For the years that line has been on the individual income tax return, you'll see in 2018, tax year 2018, 1.2 million was collected. So compliance is very low when it's up to the individual to report. And this is just not Kansas, it's across the country. Compliance is generally under 4% on that, which is why it's so important to get more out-of-state companies to be registered. While we're on that subject, there will be some bills that will be coming before the committee dealing with marketplace facilitators. Right now, we believe our statute allows us to require out-of-state remote sellers to get registered with us. Remote sellers being those companies that sell directly to customers in the state of Kansas. What our statute does not allow us to do is require marketplace facilitators who might maintain a platform to sell their own products into the state, but also the products of third-party sellers. If you, and I'll use Amazon as an example, over 50% of Amazon sales are not Amazon products. And there is no obligation, legal obligation, to collect if you're just a marketplace facilitator selling on behalf of a third party. Kansas is one of 3 states that doesn't have a marketplace facilitator provision. The other states, Florida and Missouri, are now actively pursuing legislation this legislative session. On the bottom of page 14, again, gives you just an idea of the volume of returns that get filed with the department. Technically, sales tax returns are supposed to be remitted electronically. That's not always the case, and we do still get paper returns. Again, our channel management folks handle all of those paper returns and payments. If you turn over to page 15, just very quickly, gives you an idea of the motor fuel tax collections. And you'll notice that for fiscal year 2020, there's a decline, and it's not hard to figure out why. You know, less gas was being consumed. Folks were not traveling during the pandemic. But something that the committee and the legislature will have to confront at some point in time is the fact that, you know, there may be less and less fuel consumption if there is a push toward electric vehicles. So who knows what the financing mechanism might be for the state highway program, but it may switch to user fees at some point, at least to a certain extent. Again, on page 16, just indicates how the motor fuels receipts are distributed. Turn over to page 17, gives you a very quick picture of the mineral severance tax, which has declined steadily over the years. You know, many years ago, when I was hired on at the Department of Revenue, I was the first severance tax attorney. And at that point in time, severance tax receipts were well in excess of $100 million. So things have changed significantly over the years for that particular revenue source. If you look to page 18, again, this is one of those areas where you might be getting questions as a legislator, and it just deals with the food sales income tax credit. I know you had some testimony last week, Thursday, I believe, that would essentially change this program. Instead of having a credit mechanism, actually have a refund available to families for food purchases. And that particular approach is similar to what Kansas had for years until this credit mechanism came in just, within the last 10 years. On page 19, again, gives you information on the homestead property tax refunds and the dollars associated with those. Again, for fiscal year 2020, we had 63,000 plus claims and 20.8 million in refunds. This is one of those programs where the department does have or provide the opportunity for taxpayers to file electronically. And obviously, filing electronically is going to expedite any sort of refund that might be coming to the taxpayer. On page 20, you'll see some performance measures. Again, the objective would be to get as many electronic filers as we can get. And right now, we're right about 90% of taxpayers file electronically. At the bottom of that page, it kind of gives you a sense of the volume of telephone calls that the Division of Taxation receives and the response time on those, and how quickly we get business applications processed and issues like that. So anyway, that's a very quick synopsis of the numbers for last year. And if we turn over to page 21, just want to hit some of what I think are important points regarding the department's operations last year in calendar year 2020. Again, we processed 1.7 million individual income tax returns. 894,000 of those were refunds, totaling 439 million. Again, as I stated previously, the tax extensions for individual income tax, corporate income tax, privilege tax, extended the due date to July 15th last year, pushed a lot of receipts into FY21. And as you will recall, we also last year, for the first installment payment for withholding or estimated taxes, that also was pushed forward a few months, again, to provide some level of relief for those having the obligation to make these payments. A couple of the things that are going on right now within the department, one of them is during 2020, we've put in place a new system that allows us to manage our audit routines much better. And it focuses more on dealing with electronic records on field audits. And this particular program that was put in place also gives us the ability to do better audit selection than has been the case in past years. So that we think that is a very important update within the department and makes the department able to deal with taxpayers more efficiently. And most corporate taxpayers are going to I think, appreciate the opportunity to deal with electronic records instead of having department auditors come out into their location and park themselves for weeks. This allows much to be done in offices as opposed to having to pay travel costs and occupy the time of taxpayers. So that's one improvement that we think is going to be very beneficial for the department. The next project that, in fact, we just signed the contract on this. This is going to upgrade our channel management hardware and software, and hopefully will allow us to process, paper more quickly and efficiently, and get the data from those returns into our operating systems more efficiently. Again, I indicated that particular unit, the channel management, is on the second floor of the docking building. It will be moving to the Zabel building at 29th and Topeka this year as well, as part of this upgrade for that particular component of the department. One of the things that I was very surprised about, when I came to the department, I think we had in taxation 6 individuals who would be able to work remotely. And with the pandemic, we are now in a situation where 254 out of the 340 employees in the Division of Taxation can be able or authorized to work remotely, which I think was a pretty major accomplishment for Director Stotts, and not only Director Stotts, but our IT Director, Andy Sandberg. It's just not simply giving somebody a laptop and letting them work from home. The security protocols are intense because we are dealing with tax information, and it's just the criteria that we have to satisfy dealing with the IRS and their safeguards makes this a very secure environment. But this was all able to be done in a very short period of time, and I attribute the ability of the department to continue to operate all year without any interruption to the work of these 2 gentlemen and their staffs to get remote working in place. Going forward, we're going to see how this all plays out. We may have some sort of hybrid approach to having our employees in the offices or working remotely. Time will dictate, but we need to get through this pandemic before we make any final decisions along those lines. One of the things we did do during the pandemic, because of the hardship that individuals were facing and businesses were facing, we actually suspended our collections operations. And again, we have a collections unit within the Division of Taxation. And I would also say that we took a very, very lenient approach to any sort of penalty that might otherwise have been imposed under statute. The Secretary doesn't have much discretion under our tax code, except in the area of penalties. And we exercise that discretion very liberally to not impose penalties under any circumstance where someone was unable to pay because of the pandemic. And furthermore, if someone owed tax to the department and they were unemployed, their account was essentially suspended, and no action would be taken while they were in that status of being uncollectible in our view. But again, we encourage if folks can't pay, and when they're coming back into the system, if they can't pay, to contact the department to work out a pay plan that will, they can accommodate with their, the income that they do have coming in. Again, penalties are not an issue under these types of circumstances. It is perfectly fine that penalties not be imposed. Certainly there is reasonable cause that penalty not be imposed. So anyway, that's 2020 operations. For 2021, there is something I need to make you aware of, and that is because of federal legislation late last year, the Internal Revenue Service is updating its system, its operating systems, and will not be accepting tax returns, electronically filed tax returns, until February 12th. Kansas also will not be receiving electronically filed tax returns until the IRS does. And there are reasons for that system is in place, and they have to do a lot with preventing fraud. But I can tell you that last year, the last week of January, the department paid roughly $30 million in refunds. That did not happen this January, again, because we did not have the returns to process. By January 28th of last year, the department had processed a little under 100,000 returns. By January 28th this year, we've had 372 returns that were processed. Last year, by February 14th, we had processed 227,000 returns. So you can see, as soon as the systems at the IRS are turned on and we start receiving returns, we are going to receive hundreds of thousands of returns, which we are anticipating and feel that we can process as they come in. Our goal this year, and it's a goal that's been met, quite frankly, previously, is that refunds will be deposited into a taxpayer's account within 7 calendar days of the time that we receive the electronic return. And again, it has to be an electronic return with information that will allow us to do a direct deposit. So within 7 calendar days. If the taxpayer requests a paper return, you tack on another week for mailing. But still a very short period of time to get returns. I was looking at some information this morning. I think the Internal Revenue Service indicates that taxpayers can probably expect to receive refunds if they file electronically with the direct deposit option, that they would get their refund within 3 weeks. So again, we are hopeful that we will be able to maintain that time frame for getting receipts or getting refunds to taxpayers, particularly now when they need it. And that was a goal that we had last year. And again, feel very good about the time frames within which returns were processed and refunds were paid. Again, this year, any sort of penalty that might be otherwise required by statute, extreme flexibility in waiving those to the extent any sort of late payment is caused by the pandemic. So we do not expect the Internal Revenue Service to extend the filing deadline past April 15th. And as you know, if the IRS does that, Kansas has to follow suit, because you can't prepare your federal or you can't prepare your state tax return until your federal return has been prepared. But at this point in time, we have no indication that there's going to be any extended deadlines for tax returns. So, Mr. Chairman, with that having been said, I would be happy to respond to any questions.
Mr. Secretary, we have a first question from Representative Highland.
Thank you, Mr. Chairman, and Secretary, thank you for coming and giving a presentation. My question centers around the compensating use tax. Did it not, the Wayfair versus South Dakota, did it not say that the state was to provide software for the collection of those taxes? And what are we doing about that requirement?
Well, here's what the legislature has provided to be done in legislation that it's passed in past years. We are members of the Streamlined Sales Tax Agreement, and it's an agreement among a number of states. And the benefit of belonging to that agreement is that an out-of-state vendor, if they want to get registered and remit to the state of Kansas, they will call a service provider that has been engaged under the Streamlined Sales Tax Agreement, and that service provider will do all of the compliance work for that particular company at no cost. It is paid for essentially by the state of Kansas, that compliance cost.
Thank you for that. The second question I have is concerning your marketplace facilitators. Is this not, let's call it by its correct name, this is a consumption tax, is it not? And you're saying that we will have to pass legislation to make it legal to collect this tax. Is that how I understood your statement?
To make it legal for a marketplace facilitator to be required to collect the tax for the state, yes.
Thank you, Mr. Chairman. Thank you, Mr. Secretary.
Next question is Representative Gardner.
Thank you, Mr. Chairman. Thank you, Mr. Secretary. I have a couple quick questions. Number one, I haven't seen the revenues from January. You were talking about compensating use tax being 60-some million. Can you review January for us?
January tax-only receipts for January were $795 million. And that was 90 million over the estimate and 70 million over January of last year. But keep in mind, and I want to make this point again, that those receipts are a little bit overstated because, again, in January last year, we paid $30 million in refunds, which we could not do this January because we did not have the returns because of the IRS delay in their processing. So again, the actual receipts show 70 million more than last January. But again, perhaps that ought to be closer to 40 million if you were going to take into account some refund measure. Now, those refunds are going to show up in February and March now instead of January.
Right, that's where we might see a decrease because of the refunds.
Right.
Mr. Chairman, just one follow-up. Mr. Secretary, the Department of Labor is sending out 1099s right now for unemployment compensation that Kansans received. And I believe, if I remember correctly, only about 10% withheld state taxes. So I guess my question is, what are we going to see come April 15th?
Well, and you're correct. A small percentage of unemployed opt to have withholding taken out. So depending upon their other tax circumstances, it is possible that they could have a tax liability in April. And if they have not made estimated payments, then they could have a tax liability at that point in time.
Mr. Secretary, if I could just follow up along that second question, what do we need to tell people that are receiving these 1099s that did not file for unemployment? It was a fraudulent claim and they are receiving the 1099.
You will tell your constituents, and in fact, it's effective today. The Department of Labor has put guidance out on the 1099-G and what these individuals who are, subject to this, the fraud out there, for who they should contact to get that clarified and remedied. Yeah, but if you didn't receive it, and I'm doing the very same thing because I was one of those victims. So, yeah, the Department of Commerce has a contact, and quite frankly, if you wish, I'd be happy to have that information provided to the committee as well. But it's a very detailed information in terms of what needs to be done.
Thank you, Secretary. Yes, I think the committee would like to have that information, please. And did you say it was Department of Labor or Department of Commerce?
I'm sorry, Department of Labor.
Okay, thank you. Next question, we have Representative Wassinger.
Thank you, Mr. Chair. In addition to that question, I'm concerned about all of the companies that are being charged for fraudulent employees, such as myself and many people that I know. So how are they going to handle that? Also, some of my constituents have gotten checks from the state of Kansas. And so how is the Department of Revenue going to handle that as well? Thank you.
And I'm not sure I'm tracking totally when you say companies are being charged with
Unemployment claims, which I know is for the Department of Labor, but they're also a lot of these people are getting checks. So this continues with a joint problem between labor and revenue when it comes to the 1099s and all the transfer of funds.
Well, I mean, if folks are actually receiving checks, then I guess we would be engaged at that point in time. And quite frankly, I've not heard of this, and I would be happy to follow up with you, Representative, and get more detail, and we will work with the Department of Labor on that.
Thank you very much, sir. Thank you.
Representative Turner.
Yes, thank you, Mr. Chairman, and thank you, Mr. Secretary, for your time today. And my question's also on 1099s. It was my understanding that because of concerns of fraud, your department was going to be extra vigilant in terms of scrutinizing and flagging anything that hinted to be a fraud and holding those 1099s back. Is that correct?
I don't think, we have a pretty extensive system in place to detect fraud. And I'm not sure anything extraordinary was done dealing with this. But yeah, we are constantly vigilant. And, we talk about a lot of returns being filed and processed every year, but we also have a lot of returns that, because of the return not satisfying certain tolerances we have within our system, they are kicked out and they are investigated. And we have thousands of those and I don't want to say they're fraudulent, but there's the potential for fraud, and there needs to be some additional explanation to the department before that return will be accepted.
So
I wish there could be more detail on our fraud detection methodology, but I don't think that's prudent, quite frankly.
I just wonder how many were held back for detection of possible fraud?
I'm not sure I have those particular figures available today, but again, I would be more than happy to get with the Director of Taxation and give you the current figures on returns that we have, and we call it being work listed for some irregularity. But by far, the vast majority of returns are just fine and they're accepted.
I mean, I, like others have voiced here, I've gotten phone calls from folks that weren't on unemployment, yet they got a 1099 with taxable income, and they're pretty frustrated, and just wondered your view of how that happened, and you know, if there wasn't an opportunity to flag those and catch them.
And quite frankly, we will visit with the Department of Labor. I mean, the Department of Revenue doesn't get involved until we're pretty far along in the process. Yeah, it's a very valid concern, and we will get you some information in terms of what we have detected, and then what we might do to prevent that going forward. The fraudulent use of these proceeds.
Representative Turner, Representative Gartner would like to
I'm going to
elaborate.
try to respond, Representative Turner. I believe my office mate this afternoon just responded to one of your constituents. They were calling, they didn't know how to get a hold of you. But he did go to the Department of Labor. He had received a 1099, had never filed for unemployment, did get a hold of Julie McGinney over at the Department of Labor, and she responded to this constituent, I believe today, to go ahead and say, we will reissue a new 1099 showing zero compensation. So I think that's the process to go through, just FYI.
I appreciate it. I assume this is played out. That takes care of that one guy, but there's a lot of more of them out there. So thank you very much.
I think it's a safe assumption to say that the Department of Labor, when they send those out, they may not be certain that it was fraud until they can hear back from and a lot of times people who are victims of fraud, they won't know it until they get that 1099. Next on the list, I have Representative Clayton. Okay, Representative Baker.
Thank you, Mr. Chairman. Thank you for the presentation. Always excellent. On those Department of Labor issues, would you please share those contact information and all that with the public, so we don't get all those emails that we have to just kind of eliminate us out of that step if possible? That would really be nice. But, or I can just go ahead and forward it to Representative Gartner. So my question is, on the internet sales, what % do you think we're able to tax with the current situation?
It's hard to say, not knowing exactly how many remote sellers there are, but I can tell you this. We've undertaken a project recently where we've identified the 1,000 top remote sellers, retailers in the country, and we matched that against our registration list, and we found out that over 600 of those were registered with us. And then we've gone about sending a letter to those who aren't registered, advising them of what Kansas law says. And since that has gone out, we've had contacts with other companies being registered. But I wish I could give you a percentage of how many we have registered out of a total. We just don't know what that total number of remote sellers is. I can tell you that roughly on a monthly basis, we get 300 to 400 new registrations every month from out-of-state remote sellers.
So, if you don't mind, another follow-up on that. We've had a lot of discussion last year in committee when we brought the Attorney General in, and he mentioned a threshold before we started implementing that, which is the most ridiculous thing I've ever heard in my life. We're not going to support a threshold on that, are we?
There have been bills introduced with thresholds. The Governor's Council on Tax Reform has proposed a marketplace facilitator bill with no threshold. I think the belief was, because South Dakota had a de minimis threshold in their law, and therefore all states have to have sort of what South Dakota had. But that's not necessarily the case. South Dakota basically said, you have to have $100,000 of sale or 200 transactions. Well, so if you have an out-of-state merchant selling party favors for $1 a piece, and you sell 200 of them into the state of Kansas, so $200 in sales constitutes nexus. I mean, it doesn't make much sense. Fact is, in-state businesses making under $100,000 in sales are remitting tax, actually tax to the tune of $49 million coming from small businesses making sales under $100,000. So, yeah, no de minimis, no specific de minimis has been recommended by the department at this point.
It would really be interesting to know how many of our sales tax dollars have shifted from bricks and mortar over to that internet. That'd really be interesting. But I will tell you, if we have a threshold, that will be the surest way for a legislator to get unelected, because every local retailer will probably lynch them. So anyhow, thank you for your time. Appreciate it.
Yes, the Wayfair decision has basically addressed an issue confronting local merchants for over 50 years. And it helps to level the playing field, which is what local merchants have been wanting all that period of time, instead of being able to, or being required to operate at a distinct competitive disadvantage. Because if your out-of-state merchant is not collecting that tax, that puts the in-state merchant at a very distinct disadvantage.
If I could follow up just a little bit on that, the threshold and these marketplace facilitators are treated somewhat different, and they are remitting the tax, is that correct, for that third-party seller, and then they bill the seller for that tax? Is that how that works?
The marketplace facilitator would basically collect the tax, assuming a law were passed. The marketplace facilitator would collect the tax on the sale to the customer. It's the customer that's ultimately paying the tax. It is not, it's not the marketplace facilitator, and it's not the third-party seller. Under Kansas law, the tax burden is on the consumer, and that's who pays it. It's just, the whole marketplace facilitator issue, it's not a taxation issue at all. It's a collection issue. Who's going to collect the tax? And you can collect it.
And I may have misspoke. I was curious, is the marketplace facilitator in charge of then remitting the tax since they have collected it? Or is that third-party seller that might have, if there is a threshold of $100,000, if they're selling $50,000 worth and more than 200 transactions, are they the ones that are responsible, or does the marketplace facilitator remit that on their behalf?
My understanding is that the marketplace facilitator would be registered with us, which they can do through Streamline, and would remit the tax.
Committee, any further questions? Representative Sanders.
Thank you, Mr. Chairman. Mr. Secretary, early on in your presentation, you talked about a taxpayer advocate. You're going to have to help me with his last name, but it was Bob. I'm sorry?
Bob Cleland, yes.
Yeah, would he not be a person to contact with if there was a fraudulent issue with a 1099?
Well, I think the fact is, it's not really a Department of Revenue issue. It's whoever issued the 1099 has to issue a corrected 1099. But you know, if Bob, if we get contacted, we're going to refer the taxpayer to the correct person who is able to fix the problem for them. But the Department of Revenue can't change the 1099-G. It's not within our purview.
Committee, any further questions? None, and I don't see any online. I have one last question that's a little bit down a different rabbit trail. As you know, Secretary, we have several bills out that are proposing to decouple from our rolling conformity. One of the provisions in some of those bills is decoupling the itemized deductions. And I just wanted you to speak to your audit department and what kind of capacity you have if Kansas decouples from itemized deductions versus standard deductions at the federal level. Is the department able to handle that caseload because they might receive the standard deduction at the federal level, and if Kansas then allows them to itemize on Kansas deductions, it's essentially Kansas that is responsible for auditing those itemized deductions. How would the audit department handle that? Is there going to be an increase in the capacity needed to handle those?
We would need to increase staffing to handle that. You know, depending upon the number of folks who might itemize, and I think some of our estimates would suggest that maybe another 100,000 might do that. And you're exactly right, Representative Smith. We would have to do the verification of the itemized expenses, which, you know, for some may not be that difficult, but for medical expenses, yeah, it could be quite burdensome, and certainly we would have to increase staff to be able to do that, which is one of the principal reasons that Kansas adopted a constitutional amendment back in the late 60s to allow the state of Kansas to conform to the Internal Revenue Code on a rolling or a prospective basis. The Internal Revenue Service does the auditing, and Department of Revenue is just a beneficiary of that work effort. Seriously, that is one of the primary reasons why that change was made back in the 60s.
Thank you, Mr. Secretary. Committee, any further questions? Seeing none. Mr. Secretary, thank you very much for your time today. Thank you for the extensive information that you've provided us. I'm sure now that we have this handout, we can create our own fiscal notes and we won't need to bother you anymore.
Kathleen says thank you.
Committee, that concludes our business for today. Is there anything else that needs to come before the committee? If not, we are adjourned.